Hello everyone and welcome back to SNS Study Station. So today we are going to learn about financial markets. Okay, it is a part of Indian financial system. We have covered the topics of Indian financial system except this one. There are components of Indian financial system is categorized into four parts. Financial institutions is there, financial instruments are there, services or participants are there, and then financial markets are there. Only this topic is left, markets. We will cover it today. Now let's see financial markets, where commodities, assets can be traded. Okay, where trading can be done, buying and selling can be done. So where financial assets can be sold or purchased. What are the financial assets? It can be shares, it can be debentures, it can be any bills, mutual funds. Okay, like this we will cover it, we will see it. So first market is capital market. Now you can see the categorization. There are four markets: capital markets, then money markets, commodity markets, and foreign exchange markets. So capital market is basically for long-term securities. Okay, we'll see it in detail. It is for long-term securities. Stocks and bonds are traded. Its participants are investors and institutions. Fundraising can be done through capital markets because it is for long term, and investment is obviously for long term. Then in money markets, it is opposite to capital market. It is for short time period. Under it there are various instruments included. About the capital and money markets, we'll see it in detail. Okay, after this after learning few things about these four markets, we'll see these two in detail, about the instruments, how we can do trading, how we can do investment in these markets. We'll see. So money markets participants are banks and corporations, and it is for liquidity management as it is for short time period. Commodity market, that is market for commodities, where commodities are traded. Okay, just like gold, oil, grains, silver, these things, any commodity can be traded whose value can be fluctuated. Like gold is there, so its value fluctuates. Sometimes it goes up, sometimes it comes down. So the commodities whose value goes up and down, that commodities can be traded in the market. That is called commodity market. Participants, producers and consumers. And commodity market, its functions are hedging and speculation. That means hedging means protection against losses. It helps us protecting against losses, and speculation can be done here. Foreign exchange markets are there. By its name you can check, it is market for currency trading. Currency can be traded in these markets. So forex, currencies are the instruments. Mainly currency is the instrument in these type of markets. Okay, one currency can be given and the other currency we can get in exchange of that. Banks and traders are the participants, and its function is basically currency exchange. Now let's see more about capital market. What is a capital market? What are its functions? What are the instruments involved in it? Let's see that. So basically capital market is a market where financial instruments or financial assets are traded for more than a year. This market is for long term, and here instruments are traded for more than a year, and basically it includes two instruments: stocks and bonds. Stocks, that is shares, can be traded in these type of markets, that can be for a long time period. So with the issuance of shares, the company can raise its capital. Okay, and it can use that money in its operations, whether in long term or in short term. Then bonds are there. Bonds or debentures are there, means companies can borrow. Borrowing can be done, borrowing and lending can be done for a long time period. Okay, and these markets are regulated by SEBI, Securities and Exchange Board of India. So there is a regulator for these markets, that is SEBI. Now capital markets is of two types. First one is primary capital market. Primary capital market and secondary capital market. These two are the markets under capital market. So primary capital market is that market where there is new issue of shares. Whenever the shares are issued for the first time, that means it is a new issue of shares. Okay. Whenever a company comes in the market, a company has come in the market, a company has just introduced, okay, someone has set up his business. So for that purpose, that business person will require capital. So for that it can issue shares. If the shares are issued for the first time, that is there is a new issue of shares, it is known as IPO, initial public offering. Okay, so it is the market where the shares can be issued for the first time. And then FPO, follow on public offer. IPO is initial public offer, it is initial public offer. Okay, when the shares are issued for the first time, so it comes under IPO. IPO is launched whenever the company issues shares for the first time, so it is known as IPO. And then after first time, if the company again requires capital, if the company again requires fund, if any company has opened, if there is a newly opened company, it requires funds even after IPO also, then there is follow a public offer. So IPO and FPO comes under capital market. Whenever there is new issue of shares, IPO is first time issuance of shares and FPO is second time, third time. Whenever the company needs huge amount of capital, a new business, for new business setup or for the expansion of business, IPO and FPO can be launched. Okay, here it is written also, when more funds are required after IPO, then FPO is issued. Even after IPO, the company's money requirements is not fulfilled, then it will issue FPO, follow up public offer. And it is for opening a new business or for expansion of business whenever huge amount is required. So the shares are issued in the primary capital market, and shares can be directly purchased from the companies. Directly it can be purchased from the companies. Then comes secondary capital market. So the other name is a stock market. Maybe some of you may know this market also. A stock market or a stock exchange is there. Okay, a stock exchange is a marketplace whose business is buying and selling of securities. So under a stock exchange, we can do buying and selling of securities. Okay, it is a very famous market for shares, debentures, derivatives. So National Stock Exchange, Bombay Stock Exchange, these are the famous stock exchanges where we can do the trading of securities. So it provides liquidity to securities. Secondary market, under secondary market, shares purchased from the companies can be bought and sold to other investors also immediately. Suppose a person has purchased shares from stock market and he can transfer his shares to the other investors also. There is no fresh capital formation. Secondary market is not for new issuance of shares. When the shares are issued in the market, whenever any new company comes in the market and it issues shares, so after that time the company gets listed in the stock exchange, and after that whenever it will issue shares, it will come under secondary market. Okay, so company gets listed in the stock exchange after the shares are purchased in primary market. Okay, so this is about capital market. Now let's move to money markets. What is money market? Just like capital market is for long time period, money market is for short time period. Here assets or instruments are traded within a year. Its time period is within the year, and it is regulated by Reserve Bank of India. So its instruments include call money, treasury bills, certificate of deposits, commercial papers, commercial bills. Okay, CBLO, these things are included under money market. So first three, call money, treasury bill, certificate of deposit, these are used either by banks or by government. It is used. And commercial papers and commercial bills, it is used by corporates or intermediaries, and about CBLO, about all these 6 instruments. Let's see it in the next slide. Okay, so first one is call money. First instrument is call money. Call money, it is an interbank transaction. It is a trade between banks. One bank can take loan from the other bank and there is no security. Bank does not need to keep any security. Suppose a bank needs money immediately, so it can borrow it from the other bank. It is an interbank transaction. So here call money can be taken for 1 day. 1 day loan, that is known as call money. If the loan is for 1 to 14 days, that is known as notice money. And if the loan is for 15 days to 1 year, that is term money. Not more than 10 year. Not more than 1 year. If it is more than 1 year, that will come under capital market, not in money market. Then treasury bills are there. Treasury bills are used by government for fulfilling their requirements. It is basically issued by government for meeting their requirements. It can be salary of the ministers, it can be budgetary expenses, or whenever they require money, when a government requires money, so they issue treasury bills. It can be of 3 tenures. It can be either issued for 91 days, 182 days and 364 days. There is no interest. These treasury bills are issued at a discounted price, means less than that price which is written in that bill, and whenever the people wants to sell that bill and wants to get money, so he can redeem it at its face value. Minimum amount is 25,000 minimum amount, and it is issued by RBI on behalf of government. Then commercial paper is there. Commercial paper can be issued as a promissory note, okay, and it is used by companies. Companies can issue these commercial papers and its duration is from 7 days to 1 year. Minimum amount is 5 lakh. Whenever the company requires money, so they can issue commercial papers. It comes under money market instrument. It is for a short time period, and here it is issued as a promissory note, means if the company is issuing it, they will write that I promise to pay this amount after this time period to this particular person. Okay, like this they will issue it. Means a paper, obviously a paper will be issued because the person who will give money to the company, that paper will be there with that person, and whenever that time period will be completed, he will take it to the company will return his money. Certificate of deposits is there. It is issued by banks, and it is a negotiable instrument. Means if you have a COD, if you have certificate of deposit, you can give it, you can transfer it to any other person also. So it is a transferable instrument. Its minimum value is 1 lakh and duration 7 days to 1 year. Okay, so banks issued this document. It is not just an interbank transaction. It can be taken, it can be purchased by individual. Commercial bills are there. It is a bill of exchange. Okay, whenever a person, whenever any company needs money, so it can issue a bill of exchange, and it is issued for 90 days. Okay, so the bills can be issued for 90 days, and when a bank accepts trade bill, it becomes commercial bill. Suppose there is a transaction between two persons. Okay, one person has taken money from the other, so he will return after a certain time period. So the other person who has lent money, he can go to the bank, and when the bank will accept his bill, it will become commercial bill. Bank will pay money to him. Okay, like that. Then collateralized borrowing and lending obligation, CBLO. So it can be trading can be done between CBLO members only. They can lend money, they can borrow money, and it is operated by Clearing Corporation of India Limited. Duration overnight to 1 year, 1 day to 1 year. Its duration, and for this collateral security is needed, just like treasury bill. Any certificate, not just in physical form, any digital security can be used here. So this is all about financial markets. I hope you have learned something beneficial here. Thank you.